Hi investors, welcome to today's video. Today we are gonna talk about one of the company which we have already covered in this YouTube channel earlier also, and today we are gonna look towards why this company, despite showing a strong fundamentals and even a result, why it's still not moving up, or it is continuously falling down and down. So let's just understand how it's gonna or why it's going down, or what's its future gonna be. So let's start with video. So everyone love buying a stock making new high, but almost nobody wants to buy them when they are making new lows. And but here's the strange part, right? Some of the biggest investment opportunities have come from companies whose business kept improving, but while their stock prices kept falling. Okay, so today we are looking um, at one such company, and the company name is AVP Infra. Over the last few years, or last year we can say, not few years, the stock has continuously declined, and many investors have already exited it, and some believe the story is over, right? And but when we actually listen to the management commentary, or from earlier part also we are following the management, so look at its order book and study its financials and understand how SME stock actually behaves, the picture looks very different, right? So the real question isn't like why is AVP falling, but the better question is the market is missing something, or let's find out regarding it, that what's actually happening here. So first, let's separate the business from the share price. One of the biggest mistake investors make is assuming that the stock price always reflect the business quality, but it doesn't. Okay, especially in SME and micro cap company, there are times when business improves, revenue grows, and order book expands, but management execute well, yet the stock price keep falling, and AVP may currently be going through exactly that phase. So I just want to clarify that please avoid the outer side noise of dog barking. So let's just focus on the video and let's just focus on the company. So the business is actually improving. Let's first look at the fact that management said that they practically executed around 500 crores of worth of work during FY26. So revenue they have achieved of 500 crore, but they were not able to show that 500 crore worth of revenue, and however reported revenue was around 440 crores. But the thing comes is why they reported 440 crores. Did the project stop or no? But management explained that nearly 70 to 80 crores worth of work couldn't be recognized as revenue because the project milestone weren't certified before year end, and this happened mainly because bitumen shortage and sudden price spike delayed the project completion. And in these words, execution happened, but accounting recognition got delayed, and that's an important difference. So that's what actually some of the people didn't understand that stuff. But yeah, in next quarter, so first half FY27, the this 70-80 crores will be additional in this upcoming quarter result. So yeah, otherwise they have achieved their guidance of 500 crores, and now they are targeting about 700 crores, sorry, by this year. So let's focus on its margin. Margin came down. Another reason investors become very worried about. So was margin compromise or compress? So PAT margin declined. EBITDA margin also softened. But management explained the three reasons. First was bitumen price increased almost 50 to 60% during the geopolitical conflict of Iran and Israel and even US. The second, instead of rising the equity at depressed price, So management borrowed more, that increased the financial cost. And third was expenses were booked immediately, while delayed in billing meant revenue wasn't recognized, and this temporarily reduced in profitability. So management believes that FY26 represented one of the toughest operating environment, but yet they still guided the PAT margin around 9 to 10%, with the intentionally moving towards 11 to 11.5% over the time. Now just look, then why is the stock price still falling? Now comes the real question which comes in the investor's mind. If the business is stable, why has the stock continuously fallen? And the answer may have less to do with fundamentals but more to do with liquidity. The SME stock usually have a very small floating shareholding, and daily trading volume are limited. And when the few investors decide to exit it, there simply aren't enough buyer, and that creates a sharp fall in price. Unlike the large cap companies, the where institutions observe the selling, SME stock can keep falling simply because liquidity disappears, and sometimes nothing changes in the business but only buyer disappears. That's the only reason. This is the only reason why micro cap become volatile. Many legendary value investors often say the market is volatile machine in the short term and waning machine in the long term. The short term reflect sentiments and the long term reflect business performance. So microcap amplify this behavior. During the bull market, liquidity pushed the valuation much higher than fundamentals, and during the correction, the same lack of liquidity pushes the valuation much, we can say, lower. And AVP Infra appears to be experiencing the opposite side of the cycle. So now let's just look at its valuation. Today the stock trades around 3.5 times of earning. So now a low P alone doesn't make a company cheap. Sometimes business deserve low valuation, but investors should ask always, has the business permanently deteriorated or has sentiment deteriorated it? So that's where research become important. And management still sound confident. Interestingly, management did not reduce the growth guidance. Instead, they retreated to 700 crores revenue guidance for FY27, and they repeatedly stated that we will do it, and whether they ultimately achieve it, investors will have to monitor. But the confidence remains, and current unexecuted order book stands around 500 crores, and management has significantly expanded its tendering team, and instead of bidding selectively, they are now intent to bid for nearly 100 tenders to improve order win. Okay, so they are not standing still. Another important point is that company isn't relying on only on road anymore. They have started entering in solar EPC and even in pre-engineered building. And solar is still a small. PV is also in early stage. Neither contributes significantly today, but if this business scales over the next few years, they could reduce dependency on traditional road construction and think of them as future, what you can say, optionality, not today's earning drivers. And let's move towards our next point or topic. We can say the main board migration could change the liquidity. Now here's the interesting, what investors want to watch closely is that the company has indicated plan to migrate from SME platform to mainboard. It If that happens, it could improve liquidity significantly. And why? Because mainboard companies become accessible to much large investor base, more mutual fund, more institution, more retail participation. And again, there is no guarantee that stock can immediately move higher, but it improved the liquidity, often help uh, the valuation discount attached to SME companies. And for many SMEs, main board migration becomes an important milestone. Risk investors shouldn't ignore. Of course, this isn't a risk-free story like other companies. Receivable remains elevated, and working capital continues to remain close monitoring, and debt increase because management postponed the liquid equity dilution. They were thinking of QIP and all this stuff, but because the stock price has gone down, so they are not looking towards this idea, and they are just raising the debt for this working capital and expansion. Execution delays can affect the reported earning. Bitcoin price remains unpredictable, and expansion outside Tamil Nadu has still not been unsuccessful. So investors should continue monitoring the quarterly executions. So we are in this company, we can't quarterly see the execution. We can just see first half and second half. Let's see when they turns into migrate into a main board, then they can probably put quarterly results from next year onwards. So final thought from my side is that there is an old investing saying that the stock market transfer the money from impatience to patience. That's my favorite quote, one of the favorite quote from value investing stuff. And whether AVP eventually rewards shareholders depends on one thing: can management keep executing? And if the revenue reach the guided level, margin stabilize and working capital improves and liquidity returns after a mainboard migration, at least the market perception of the company could change. If execution disappoints, the low valuations alone won't protect the investors, and that's why value investing isn't simple buying a low P stock. It's buying business where the market may be pricing in too much of pessimism, while the underlying business continues to move at the right direction. Um, AVP Infra may be one of those cases, and only time and execution will decide it. So that's it for today's video, guys. Keep learning, keep growing, and bye bye, investors.